You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. We are talking to Erez Kalir, who is the CEO and co-founder of Sabretooth Capital Management, which is a $700 million hedge fund based in New York. They look for what they refer to as asymmetric investment opportunities across asset classes all over the world. Erez, nice to have you on the show.
Nice to be here, Doug.
Listen, you've got a very, very strong background in investments, and looking at today's market, what sort of investment strategies would you suggest would be appropriate for an average investor?
That's not an easy question to answer because I think that the kind of investment portfolio that it would make sense to put together for any given investor depends on a lot of different things, including how old they are, what their financial goals are, what their earnings power is, what their savings are. All of those kinds of considerations should go into how someone thinks about putting together an investment strategy. And unfortunately, I don't think that there's a one-size-fits-all approach to that. I can interpret your question as what kinds of things should every investor, regardless of what the answers to those questions are, be thinking about today as they try and construct a portfolio. Mm-hmm. And I can just share a few thoughts about that, with the caveat that I don't, I do this for a living, but I don't claim to have any special or privileged knowledge or expertise. We make mistakes about these things, just like all investors do. Making mistakes is inevitable. So I would probably call attention to two things, which when I talk, for instance, to my parents, I get the sense that even sort of thoughtful people who don't do this 12 or 14 hours a day for a living maybe don't think about enough that they should think about. The first is the world, and Israelis know and appreciate this because they live it existentially, but economically speaking, the world is a pretty unsafe place today. We at least kind of believe that most of the issues that caused the 2008 financial crisis haven't really been addressed in a deep way, in that the ways that governments around the world, including sort of probably all the most important sort of governments economically, the United States, leading governments in Europe, the government of Japan, the government of China, collectively speaking, the way that governments have chosen to respond to the root problems that caused the financial crisis is not, again, to address them fundamentally, but in effect to kind of kick the can down the road. And as a result, instead of having in some ways like a fresh start after the 2008 financial crisis, a lot of the deep systemic problems that existed then still exist today, and probably are worse or more serious today than they were back in 2008. I'm thinking kind of most importantly about the problem of excess debt at pretty much every level of economic activity, particularly on sovereign balance sheets, mm-hmm. but also on corporate balance sheets and at the level of households. I think that the assumption that many kind of investors were inculcated with, over years and years, which is that you can safely invest in stocks and bonds, and as long as your holding horizon is long enough, you should be able to compound your wealth in those investments. That assumption is not necessarily a safe assumption today. So that would be observation number one.
All right. It's a scary thought to start with. Okay, hopefully your next thought will be a little more optimistic, but I'm not counting on it.
Observation number 2 actually is what I think ensues from that, or what follows from observation number 1, and that's that a lot of folks that I speak to about investments, including like my parents, right, who mean the world to me, really don't like holding cash because they believe that cash does nothing for them. And in particular, they don't earn a return on their cash. And in fact, it's arguably the case that they earn, in some sense, a negative return on their cash because of the effects of inflation. Right. And that's true, but I'm basically kind of here to tell you that I think that cash is particularly kind of in times of systemic risk in the global financial system, a kind of deeply underrated investment strategy, because what cash gives you the opportunity to do is it gives you the opportunity to be flexible, so that if there's an accident in the global financial system, you can play offense while other people are playing defense.
Right. It's interesting that you bring up holding cash, because sitting here in Israel, where many of our listeners are displaced Americans. They're Americans who keep their accounts in the States, and they live in Israel. In fact, that tends to be what I do. My day job is not on the radio, but as an investment advisor here. And clients ask all the time, well, is it better for me to keep dollars or shekels? Because the dollar has been dropping dramatically against the shekel over the past few years. And the answer is it's very difficult to know. And based on what you're saying, the concept of holding cash, which sounds reasonable because it gives you opportunities, but for someone who's not living in a dollar economy, would you suggest that the dollar is good cash to hold?
So first of all, I think that's a great question. I think that's a fantastic question. I think that so the question of holding cash, I think, is rightly put your finger on, leads directly into the question, well, what currency do you hold your cash in? And we have a kind of a saying around here, which I'm not going to go at length into explaining the genesis of. This thing is, don't own the wrong house in Houston. And the gist of what that statement means is we think it's best not to try and pick a single right answer to a question, but to be a little bit diversified. So, when I kind of think of holding cash, I think it makes sense. I do think it makes sense to hold some dollars, because the dollar is still the global reserve currency. And when things go wrong in the financial system, people always reach for U.S. dollars. Mm-hmm. Right? The U.S. dollar virtually always appreciates during times of systemic risk or crisis in the global financial system. And parenthetically, I would also tell you that my own 2 cents is that the dollar is, against most currencies in the world today, oversold and due for a little bit of a rebound. So I would probably suggest holding some dollars for those reasons. There are certain services around the world that allow you to hold Chinese RMB. It's not trivial to set that up, but if someone makes an effort, it actually is possible to hold RMB. So I think that that holding RMB is, at least a little bit of RMB is a sensible thing to do. Over the long term, I would tell you that I also personally think of gold and silver as forms of currency, even though most people may not kind of think of them as currencies in traditional sense. Certainly, if you look at, over the long period, at kind of long-term financial history, gold and silver have been used as currencies. That's to say nothing about whether gold and silver are due to move up or down in the short term.
Erez, you're saying that gold and silver are possible currencies or currency alternatives. There have certainly been people who've said that they're just shiny metal that aren't so interesting. Do you feel that is a possible argument, or it doesn't make sense?
I mean, look, it's a perfectly plausible argument. Many people say that. I just think that, factually speaking, if you look back at economic history and over any interval longer than call it 10 or 20 years, if you widen the aperture and you look over 50 years or you look over 100 years, And certainly if you look over longer intervals than that, intervals like 500 years or 2,000 years, it's incontrovertibly the case that gold and silver have frequently been used as currencies. That's just a fact. There's nothing to debate about that. And so, when you own gold and silver, that's in effect a hedge against all of the paper money fiat currencies that exist today. It protects you in the event that, which may seem like an improbable event, and probably is a somewhat improbable event, that the entire kind of fiat money or paper money system that we have gotten used to over the years breaks down.
That would be really quite something. We are talking to Erez Kalir, who is the CEO and co-founder of Sabretooth Capital Management. He's a very experienced financial manager. In fact, I saw him speak at the IRS conference in the United States. He spoke. He was the opening speaker and was highly regarded. He also holds degrees from Stanford University and Oxford, where he studied as a Rhodes Scholar, as well as Yale. And he's been talking to us today about some of the risks in the economy overall. Unfortunately, we are just about out of time. But Erez, I just wanted to ask you, if people want to learn more about what you're doing, what's the best way to follow some of your ideas or to learn a little bit more?
It's not that easy, Doug. We don't have a website. We don't. I rarely speak in public, or it's not really. I try and spend most of my time focusing on managing our portfolio, and we're not really either actively raising money for our hedge fund either. I mean, I suppose if someone is very determined, they're welcome to write our investor relations people, which is I think investor relations at sabretoothllc.com.
Or they could just wait until next time you show up on this radio show.
I would be delighted.
That'd be great. All right, listen, Erez Kalir, the CEO and co-founder of Sabretooth Capital Management, thank you very, very much for your time.
Thanks so much, Doug. Enjoyed our conversation.
Thanks.
You've been listening to the Goldstein on Gelt show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt show.